The trust is required to distribute all of its income currently to the grantor's brother, nevertheless fails to distribute anything. No amounts payable to charity, trust, tax fund, or subpart B as a simple trust. So, again, on page 176. So you guys have to take, even if you haven't had a chance to read today's material, don't sit it out, don't pass it. Tina, Rashida, simple trust or not? Rashida, simple trust? Yes. 3-4, trust is required to distribute all of its income currently to the grantor's brother. It's also authorized to distribute principal there. No amounts payable or payable to charity. Trust tax was a simple trust, which no principal is distributed. Anthony, Muhammad, simple or not? Three 4, simple or not?
You said no.
You saying why not? I'm sorry?
Is it distributed principal?
It could, but did it? Therefore, it is simple.
Yes.
Yes, simple. 3-5. The trust is required to distribute all of its income currently to one or more of three named individuals. No amounts are payable to charity. The trust tax was a simple trust. Trust is required to distribute all of its income currently to one or more of three named beneficiaries. Okay, no amounts payable to charity. David, Adrian, simple or not? Simple. Adrian, agree? Yep, simple. Right?
Is 3-1 is a simple trust?
Yep. All of them so far. 3-3, 3-4, 3-5. 3-6, trust is required to distribute all of its income currently to the grantor's brother for life. The remainder is payable to charity. Is the trust simple? In the year in which the trust realizes a gain that is out of under state law or the governing instrument to charity. In other words, the capital gain is ultimately going to inherit to the charity. Jimmy? Lisa, is it simple or complex?
Complex.
Complex. Can you agree or disagree?
Simple trust.
Simple trust still, who's right?
Simple.
Simple, Lisa. It doesn't, it's going to ultimately inherit to the charity. But this year, all income that must be paid out, no principal distributions, and nothing is going to charity this year.
Does this mean like the permanently set aside for the?
Remember, trusts no longer have a permanent set aside, only estates. Okay? There's no, after 1969, there's no permanent set aside for trust. 3-7. Before I do 3-7, I think a few different things. I want to go through, last week we did one, and I told you, maybe every week we'll do one more. I want to use this one. The one I distributed last week, I didn't like how it played out. So this is a lot easier to follow, and you know, one that, and Adrian, you were the keeper of these for, I think, Muhammad and, who wasn't here last week? So if you can give it a copy. Was it 2 different ones? 2 different ones. And now we're going to replace the one. So Muhammad and CJ, what we did is, last week I think we went through what was described as problem 2. But tonight I want to do problem 3, and this is easier to follow than the one that you have already. So let me just make some observations, and then I think it's easier once we do this, guys, go through this, and then I hope you'll feel more comfortable by going through the author's problems and saying, gee, I visualized where that might go on one of these returns, okay? So column 3 says there's interest and dividends, tax exempt income, and net capital gains. If you recall from our last class, there's no capital gains, right? The simple trust had no capital gains. This is a little bit more complicated because there's capital gains, right? Will DNI include capital gains generally, guys?
No.
No, okay? So we have interest, we have dividends, we have tax-exempt income, we have long-term capital gains. Everyone see that? We have fiduciary fees, 10,000 and 5,000. Agreed? And notice those fees, and we have tax-exempt income. So a portion, right, of the fees have to be allocable to the tax-exempt income, and as a result, they will not be deductible. Agreed? Everyone agree? Code section 265. So let's just look at, if you don't mind, I'm going to look at the front page of the 1041. Notice a lot of the exercise, guys, that you went through with the problems 3-3, 3-4, 3-5, 3-6. Look at the top left of the 1041. Notice where you're supposed to check off the box. Agreed? Well, we're going to check off simple trust. Agreed? Okay, this is chapter 2 material, right? We're going to include the interest income. We're going to include the dividends, right? Capital gain. And that gets us up to $80,000. Everyone see those numbers? The only thing that we didn't include is the tax-exempt income, right? There's no line for that, right? Okay? Now, the fiduciary fees, we're $10,000, agreed? But we're only deducting $8,000. Holy cow, did someone screw up? Did the computer screw up? And look, if you look at the first page, and then I'll show you where it is actually where the computer did this, you can see in my beautiful handwriting, the tax-exempt income over all income, right? Except, do we include capital gains? No. Why? Manufacturer's Hanover. Rashida, you see my beautiful handwriting? So we're going to disallow it. That's the disallowance, right? Of 20%. Agreed? And that's where the $8,000 came from. We multiplied that disallowance percentage times each, and that's why the fiduciary fees that are deductible are $8,000, and the attorney and accountant fees are $4,000. Agreed? So our total deductions are 12. Now, line 17 is critical. Line 17, adjusted total income, subtract line 16 from line 9. Now, where did that come from? Now, let's look. Well, that's our adjusted total income, but then we have to go to line 18, which is the income distribution deduction. I meant to say that's the critical line, line 18. Where do we get that? Turn to Schedule B on the next page. This is the famous Schedule B. Why is it famous? This is the crux of subchapter J. Is embedded in this IDD, income distribution deduction, right? We start off with adjusted taxable income, right? That's the starting point to compute DNI. Agreed?
Yes.
Anthony, you got it? I just want to make sure. And then we have to add in, right, the adjusted taxable interest, not the entirety, right? Not the entire $10,000 because we have to take away the allocable expenses to it of $3,000, right? Everyone see we shed $3,000 of disallowed expenses allocable to the tax exempt. And look, we're subtracting out the capital gain, right? Everyone see that? Got to shed the capital gain. Why? Because section 643 mandates it. And there's our, have a moment of silence, a moment of beauty. DNI right there, staring you in the face, 35,000. Well, do we stop there? No, we don't stop there because that's just going to help us give character to the income under 652 or 662. We still need to know the distribution deduction. We don't get to deduct the entirety of the DNI. We get to deduct modified DNI. Modified. So we have to subtract out, right, the tax-exempt income, or that portion that was included to get to the modified DNI, which is $28,000. that ends up back. Now we turn back to line 18, and there you go. That's the modified DNI. Remember, we never had to add back in, like we do under the code, the personal exemption because it was never subtracted in the first place. The personal exemption is actually subtracted right later on, which is here. It's a simple trust, so $300 gets deducted. Okay?
Is it added there?
It is because it's added because it's a deduction. This is all deductions, right, Anthony?
Okay.
You see what's going on there? So what's the taxable income? Ultimately, $39,700. Hey, right? This is our generic simple trust that many of you might have said before coming to our class. Oh, simple trusts don't pay tax because they distribute out all their income. Well, look, the capital gain is embedded here. You guys probably didn't even have to go through this exercise to have told me that this trust probably would have paid tax on $39,700, right? Because it had $40,000 in capital gain, right? Say again, Jill? Yeah, $39,700. Everyone agree? A lot of work to get there, but we need to because we need to, we'll see in a moment, get to the K1s. So at least we know, you know, we're all good at this. We all knew sort of viscerally that the trust was going to pay tax on $39,700. But, and by the way, most of you have had tax courses with me before. I would never ask you, okay, then what is the tax owed? You know, the tax owed here is $5610, and look, the computer had to work hard to generate that number. Let the computer do the work. That's not the hard part of this course, okay? You're not going to be asked on any of my exams to actually give me a dollar figure. What would the person owe on tax in the year 2015? I just want to, can you compute DNI? Can you compute the modified DNI? All right? That's what I'm looking for. I'm not looking for a bottom line number. All right? Now, so if you guys see how the 1041, the front page works, you see how Schedule B works. Don't worry about A&T. I don't know about you. I mean, depending on the stakes, most of us will if we get the rest of the numbers right, we'll defer to the computer on the AMT dollar figure. All right? Now, if you keep turning pages, it goes through and it just shows you the maximum capital gains ratio. The thing I want to call to your attention is the K1, okay? K1. And just call to your attention the interest income, the dividends, and the tax exempt. Now I know what, and you know why the tax exempt is $7,000, right? Everyone agree? Because those were the tax exempt income and the allocable expenses to it. Agreed? But remember, the allocable expenses, right? There's still $12,000 worth of deductions that we can still take, right? In other words, the fiduciary fees allowable was $8,000, right? And the professional fees are going to be $4,000. So last I checked, there's $12,000 worth of deductions, right? Everyone agree? So what did the computer do here? If you look at the front page, is essentially it said, look, there's $12,000 of expenses that are still allowed, and what's going to be taxable here is the interest income and dividend income. We're going to divvy up the deduction between the interest income and the dividend income. Now, truth be told, you could admit, some of you do 1041s, you could take this $12,000 all against interest, right? Because that interest is going to be subject to the higher marginal tax rate than dividends, right? Everyone agree? Yep. So you could reduce the dividends to $3,000, 15 minus 12 is 3, and leave the 25 dividends alone. This computer program defaulted, which may not be the smartest thing in the world, and did it proportionally based on the size. And said, oh, we'll allocate $4,500 to the interest, and that will reduce that to $10,500, and we'll allocate proportionally the balance, $7,500 to the dividends, reduce that proportionally down to $17,500. Okay? So everyone see where the computer got those numbers? Just did it strictly based on proportion, based on size. It doesn't have to be that way. With indirect expenses, they can be allocated any way you so choose. After the K1, the computer shows you, now we've got the allocable fiduciary fees and the attorney's fees. What was allowable and not allowable. So the computer program spells out why it came to certain determinations. All right, so you can look at that for yourself. Okay, but I think this is a useful exercise. Again, we looked at a simple trust last week. Here's a simple trust with capital gains, and I have a few more permutations up my sleeve that I'll share with you next week and the weeks to come. Okay, so each time we progress in the book, look, is this the perfect case book? I don't think there is a perfect case book for any course. But if I had to pick a flaw in this case book, is that, I wish they went through some, not a lot, just showing how this ends up on the tax return. So I hope you find these exercises useful to go through. All right, so let's go through, because the exam questions, I'm not going to ask you to fill out a 1041. They're going to be more akin to what you're seeing in the textbook. So bear that in mind, okay? So let's go through this. 3-7. A trust is required to distribute all of its income currently to the grantor's sister, receives a single item of ordinary income subject to taxation in the amount of $20,000. This item is entirely allocable under state law as the governing instrument to principal, so that's strange, okay? And the trustee has no discretion to distribute principal. The trust has no expenses. Everyone have those facts? What is the trust into the taxable income? So let's go through this. This is a simple trust. Let's start with the basic. Yes, simple trust required to distribute all of its income, no principal distributions, right? So what's the trust tend to the taxable income? For the moment, it has $20,000 of income and a $300 exemption, right? That's going to get messy if I do that. So TTI, tend to the taxable income. What's the trust fiduciary accounting income? So where do we look for fiduciary accounting income?
The uniform, whatever it's called.
The Uniform Principal and Income Act in the back of our book. And you can role play here if you're the beneficiary. How much can you jump up and down in demand? 0. Okay, just because the way state law is. What is the trust taxable income? What is the trust taxable income? Now here, is there going to be any distribution deduction, guys? No, right? There's no distribution deduction. So as a result, the trust taxable income is going to be $19,700 as well. What amount subject to taxation in the hands of the grantor or sister? What would you guys say? 0. And this makes sense, right? Because, look, the trust is earning $20,000 because the peculiarities of state law here. Can't make any distributions. Who has the money? The trust. The sister has 0. Who's the appropriate party to tax here?
Trust.
Trust is required to distribute all of its income currently to the grantor or sister. Receives a single item of income amounting to $10,000. That consists entirely of tax-exempt interest. The trust has no expenses. Again, this is the kind of thing, guys, you can see in 2 weeks from now, or we'll talk about that. Let me pause for 1 second, then we'll get back to this, because I'm going to forget it, and I'll be frustrated with myself. 3-8, you got this $10,000 of tax-exempt income. What is the trust gross income? Okay? What is the trust gross income at? Mohammed?
10,000. 10,000.
But remember, this is, taxing out the,
Not taxable, yeah.
so it's 0, right? Puts it to 103. What is the trust tentative taxable income? Well, that's 0. The gross income, the tentative taxable income will be 0. What is the trust DNI? Okay, Mohammed? 10,000. Anthony?
0.
Rashida? By the way, I apologize for the answer for B. One second. What is the trust tentative taxable income then? And Rashida, we'll get right back to you. We start off with 0, but yeah, I should have subtracted out 300, but I got. So the answer should be negative 300 is the tentative taxable income.
Can you put negative number?
Yeah, because we would end up on the under 1041. You can't have let me just see where I would put this. But it's not going to end up in this form. But that is the tentative taxable income. Okay? Tentative. It's not going to end up on the tax return as such. So what would be let's keep the DNI here. What does DNI say you start with? You start with tentative taxable income, right? Line 1 on the Schedule B doesn't say tentative, it says adjusted total income. Remember, we had to subtract out the personal exemption. The form itself doesn't. But you start off with tentative taxable income, right? What else do you do? Well, you can't, this is tentative taxable income.
Add back the personal exemption.
Add back the personal exemption under 643, and then add 10,000, right? Right, this is under code section 643, right? What is the trust fiduciary accounting income? That's the amount that she can jump up and down for, right? How much can she jump up and down for? How much?
10,000.
10,000, right? And just for your edification, and it's not a bad exercise to look at. You look at code section, page 487 of your textbook. Code section 406 of the Principal on Income Act, on page 487. Says that she has a right to the $10,000. Okay, no one's going to be surprised, but I'm just pointing out on page 487 where that is. So, DNI is $10,000. Agreed? Well, we know, excuse me, DNI is $10,000, but we also know the fiduciary accounting income is $10,000, right? Question 8. What is the trust taxable income? What is the trust taxable income? And your answer is? What is the modified DNI here? Modified DNI. Remember how, if you look at Schedule B, it has a DNI, which is 10,000. What would be our modified DNI? 0, right? Everyone agree? Everyone agree? It would be 0. The modified DNI, we're not going to get a deduction for the entire DNI. We're only going to get a deduction for the modified DNI, for obvious reasons. And therefore, there is no deduction. And therefore, the trust taxable income is going to remain at negative 300, right?
Can you explain that a little better? I forgot modified.
DNI is 10,000. And then if you look at the schedule, if you want to pull out your tax return, Schedule B,
Is that the IDD?
income distribution there. Yep. You see where it says that you got to subtract out line 12, the tax exempt income, and subtract it out. And then you're going to get to the IDD, which is another way of saying the modified DNI. So here you have DNI of 10,000, then you got to subtract out the 10,000. Why is it added only to be subtracted? Because DNI will be useful to account for the character of the income in the hands of the beneficiary. So that's important for purposes of under 652 and 662. What is the character of that income? Okay. Question F. What is the amount of subjects to taxation in the hands of the grantor's system? So this is what code section? Sal, I'm going to come back to you. What's the amount of taxation? The amount subject to tax in the hands of the system. What code section?
650.
No, in the hands of the sister. What code section? 2. 652, right? Now we're going to ask, so the deduction is 651, the income is 652, right? Everyone got that?
Yes.
Right. So what amount is subject to taxation in the hands of the grantor's sister? So here, it's subject to tax on the fiduciary accounting income. It's the lesser of the amount distributed to her for DNI. The amount distributed to her is 10,000, right? The DNI is 10,000. So the question F is 10,000, right? That's the amount potentially subject to tax in the hands of the grantor or sister. But then question G says, what is the tax character of the amount of the amount of the grantor or sister is subject to the taxation? And what does it say? You essentially take the same character of whatever the trust is. So what's this going to be, guys? It's going to be tax exempt. 10,000. Okay, tax exempt. And just point out to you, look at code section 652B. Says the amount specified in subsection A shall have the same character in the hands of the beneficiary as in the hands of the trust, right? Everybody agree? That's easy. Makes sense, right? For this purpose, the amount should be treated as consisting of the same proportion of each class of items entering into the computation of DNI of the trust as the total of each class bears the total of DNI of the trust. And then notice that I have the word unless highlighted. We'll come back to this in another problem. Unless the terms of trust specifically allocate different classes of income to different beneficiaries. So here, what ends up happening is the beneficiaries tax exempt interest is equal to the amount subject to tax times tax exempt over DNI. If you extrapolate from 652B, it creates this formula where we have the amount subject to tax, maybe double T, is theoretically 10,000 times the tax exempt over the DNI, which in this case is pretty easy. It's going to be 10. So it's the amount subject to tax, and you can take the character of each to figure out what is each beneficiary's, what proportion they're going to pull of each kind of income. But in this case, we all knew it was going to be 10,000 to begin with. We'll see how it gets a little bit more complicated. But again, if you look at 652, it creates a formula. Amount subject to tax times whatever the kind of income is over the overall DNI. So your answer for your notes is $10,000. 3-9. The trust is required to distribute all of its income currently to the grantor's sister. The trust that is, I should frame it differently. The trust that is required to distribute all of its income currently to the grantor's sister receives two items of income. $20,000 in capital gain, entirely allocable to under state law the governing instrument principal, and $10,000 in tax-exempt interest. The trustee has no discretion to distribute principal. The trust has no expenses. Is this a simple trust?
Yes.
We're in a great simple trust. It meets all three conditions. Agreed? What is the trust gross income? How many you got? What would you say here? $20,000? 20,000, agreed? Under 103, you don't include the tax exempt, just the capital gains. What is the trust's tentative taxable income? I won't say a word. Everyone take 30 seconds and come up with a number. And your answer, Adrian, what do you have?
19,700.
David?
Same.
James, Al?
I had, service hour?
What's the tentative taxable income?
Oh, wait, I'm sorry, 29,700.
What number?
29,700.
29.7. When did you get that?
20,000 plus 10,000, and minus the sum.
Lisa, what did you have? 19,700. So the difference is he included the tax exempt UA, right? And now you don't need to include the tax exempt. The tentative taxable income does not include the tax exempt. Okay? So here it would be 20,000 less than 300 would be 19,700 tentative taxable income. C. What is the trust DNI? Okay. Everyone take 20 seconds, take 30 seconds to come up with a DNI. Okay, Jill, Jenny, what number do you have? 10,000? Okay, Jenny, how did you get that?
Tentative taxable income, the 19,700.
It was around
Add back.
19,700, right?
Yeah, add back.
Add back 300,
Minus 1,000, 10,000.
minus what?
Minus
Minus what?
10,000.
Minus 10? Why are you minusing 10? Jill, what did you do?
So 19,700 plus the 300, I added back the 10,000 tax exempt interest,
Added, right?
and then take out the 20,000 of
And
capital.
then subtract capital gain, right? Right, Jenny? Okay. That gets you to 10,000 DNI. Everyone agree? All we're doing is applying code section 643. Agree? What's the trust fiduciary accounting income? Rashida, what were you going to say? Fiduciary accounting income? 10,000, right? That's under the Principal and Income Act, right? In the back of the book. Capital gains are not included, right? That's under section 4042 of the Principal and Income Act in the back of your book. Capital gains would not be included. Question E. What is the trust taxable income? Well, you know we have to get the income distribution deduction. Mohammed, to use your phraseology, the IDD, right, from the Schedule B. So we need to know what is the modified distribution deduction. What is the IDD here, guys? Tina? Well, we know our DNI is 10,000. What's the modified DNI for IDD?
0.
0, right? How'd you get it?
I took away the tax exempt interest.
Yeah. Remember the tax return to Schedule B? Right, Tina? We had DNI, but then we reduce it by the tax exempt interest. For IDD. So the tentative taxable income is 19,700, and our modified DNI is 0. What's the trust taxable income going to be? 19,700. Anyone falling off their chair in disbelief? No, because that was the capital gains less the personal exemption, right, guys? Three -9, the next question is, what amount is subject to taxation in the hands of the grantor's sister? She's taxed on the lesser the DNI or the fiduciary accounting income. Here, it happens to be the same number, right? Everyone agree? So it's $10,000. Agreed? Three -9 says, what is the tax character of the amounts on which the grantor or sister is subject to taxation? And here, we just go through what we just did under 652B and go through the same formula, and it's going to be 0, right? Or it's going to be 10,000 in tax exempt income. It's going to be the same character. 3-10. Trust is required to distribute all its income currently and grant her sister who receives 2 items of income, 20,000 of ordinary that is subject to taxation, but entirely eligible for state law and the governing instrument principal. Strange, right? And $10,000 of tax exempt. The trust has no discretion to distribute principal. Okay? The trust has no expenses. Simple trust or not?
Yes.
Simple trust. Right? Everyone agree? Bill?
Before we go any further, how is this problem inherently different from the one before it?
Because here, one is capital gain and one is ordinary income.
Okay. Got it.
Okay?
Didn't read that part.
Okay? So 3-10. Yoni, what do you say in terms of what's the tax trust gross income?
$19,700,
The gross income.
$29,700.
Gross, do you go to Visa?
20,
20, why?
because it's just the
Just the ordinary
ordinary income.
income, right, Yoni? 20,000. What's the big? What's the trust tentative taxable income? And I think you're chomping at the bits for this one, Yoni.
$29,700.
But why don't you go back? The gross income is 20. Why wouldn't you just take the gross income plus the exemption? That's what we've done consistently. So it's 19,700. Everyone agree? 20,000 less 300. What is the trust DNI? Don't say it out loud, anyone. Take 30 seconds and see if you can compute the DNI. Anthony, you got it? Yeah.
30,000.
I had to get it.
Yeah, the ordinary income and the tax exempt.
So just tell me what numbers to add.
So 10,000 and 20.
Hold on. But our starting point is 19,700, right?
Yeah, and then you add back to 300.
Yeah, back 300, right?
And then we add 10.
So we get,
30.
everyone agree? For 30,000 DNI. Strict application for section 643. What is the fiduciary accounting income here? CJ, you got that? You look puzzled.
10,000?
Right? Why?
I think that 20,000 isn't included.
Yeah, it's not under state law, the governing instrument, it's allocable to principal. Right? So the fiduciary accounting income is $10,000, right? That's how much the beneficiary can demand. Question E. What is the trust taxable income? What is the trust taxable income? And just because they tell us to, why don't we read the third sentence? 651 B-1. Okay, let's just look at that together. I'm going to have the regulations open, 651 B-1. For this purpose, the amount of income required to be distributed currently for DNI, so fiduciary accounting income for DNI, whichever is applicable, does not include items of trust income which are not included in the income of the trust, or the gross income. So it says whether or not it's DNI or fiduciary accounting income, whichever is the less one. That's good. You got to subtract out the tax-exempt income. Rashida, you can find that? You see the regulations, Rashida? 651B-1, third sentence. Okay. So, in question E, what is the trust taxable income? So to find out the trust taxable income, we have to find out what is the modified, right? You recall the modified DNI or the modified fiduciary accounting income, right? Because you can only get a deduction for the lesser of DNI or fiduciary accounting income. Everyone agree? You can only get a deduction, hear me, on the lesser of those two numbers. You can only get a deduction for the lesser of DNI or fiduciary accounting income. That's the only amount that's going to be given to the beneficiary, the lesser of the two. And then you have to subtract out, whichever is the lesser of the two, tax exempt. So it's the lesser of this or this minus tax exempt. What's the lesser of the two? What's DNI here? 30. What's fiduciary accounting income? 10. Which is the lesser of the two? Last I checked, it's 10. I mean, we'll go through this. What's the tax exempt? 10. So it's which one produces a smaller deduction? The modified fiduciary accounting income. So on Schedule B, the IDD, the income distribution deduction, right, Muhammad, would be limited to 0. Would be limited to 0. So what would be the taxable income? Would be, once again, $19,700, which is not surprising, right? Because what's being trapped in this trust? $20,000, right? Everyone agree? Because of the peculiarities of the governing instrument. Question F. What amount is subject to taxation in the hands of the grantor sister? $10,000, right? Everyone agree? She's going to get physically $10,000. Agreed? Now, What is the character of the amount? What is the character of what she's receiving? Now, on one hand, applying this formula will produce a strange outcome. What do I mean by that? So if your notes, if you just, the amount subject to tax is how much? The amount subject to tax is 10,000 times, right? She's getting 10,000 times tax exempt is 10,000 over DNI. What's DNI? So it looks like she would have 3,333 tax exempt, and everything else, right, would be taxable. Okay, you just use the formula here. It doesn't seem to produce the right outcome. And that's why I called attention to before. If you look at the language of 642B, you can just go back to that for a second. That sentence, the second sentence, it says, for this purpose, the amount shall be treated as consisting in the same proportion of each class of items entering into the computation of DNI of the trust as the total of each class bears the total of DNI of the trust. Unless, you see the word unless? The terms of the trust specifically allocate different classes of income to different beneficiaries. And that's this case. So here, we know the ordinary income is being allocated to the trust, and the tax exempt is being allocated essentially to the beneficiary. So in the hands of the sister, guess what? This should all be tax exempt. So this is where the authors are just trying to illustrate why that word unless could come up. Where that word unless could come up. So for your notes, sister has $10,000 of tax exempt income. (3-11) Calculate the fiduciary accounting income from the problem 2-2. That's on page 103. What is the fiduciary accounting income? And here, guys, in 3-11, it's 50,000 in dividends. It's 30,000 in interest. It's 40,000 of tax exempt. Interest. Dividends. 20,000 of rent. $1,000 fiduciary fee. 15,000 of property tax. Fiduciary accounting income is 124. Where did I get?
It's already half. Okay.
Where did I get this from? Again, page 103. That's the fiduciary accounting. So everyone see where this is what the beneficiary could jump up and down in demand. (3-12) Calculate the taxable income of the trust described in problem 2-2. So what we have to do, guys, is remind you what is in problem 2-2. Do you recall what the tentative taxable income is? Let's just go through it. 50,000 plus 30,000 plus 20,000, and we got to deduct $1,420 worth of the fees, not the whole. Why? Because if you recall, the loss disallowance was 40,000 in tax exempt, over 140,000 of income. We didn't include the capital gains times 2,000 equals 580. That was disallowed. So we only deducted 1,420, and the property taxes were deductible. $300 exemption, simple trust. So the tentative taxable income was $83,280. What's our DNI? What's the tax? What's the DNI here?
140,
Say again?
140.
How'd you get that? What do we have to add back to figure out DNI?
Your exemption.
Let's add back the exemption. And what else do we have to add?
Interest,
What kind of interest?
tax exempt.
Do we add 40?
Less the allocable
No,
expenses.
Less the allocable expenses, right? No? So the DNI is 123, right? So we had tentative taxable income, everyone agree? We tentative taxable income, and we have DNI. But do we get to deduct the entirety of the DNI, guys?
No.
What do we get to deduct?
Your modified amount.
Say again?
I haven't got a number yet, but.
Mohammed, this is your favorite thing. What do we get to deduct?
The lesser,
Like income distribution deduction.
Yeah.
Okay, which means we have to subtract out from DNI.
oh, the tax exempt interest
We have
of
to
the
Right, which is how much?
40,000 minus the 580.
Right, so we have to subtract it out 39,420. So this is 83,580. It is our income distribution deduction. However, Mohammed's right. We only are allowed to subtract the lesser of the modified DNI or the modified fiduciary accounting income. Everyone agree? This is one calculation. What is our fiduciary accounting income is 124, right?
So it starts higher than the 120.
It starts higher. I just want to call to your observation. We have to figure out, let's figure out what is modified fiduciary accounting income, okay? So in this 124, we have to figure out what is the embedded tax exempt income. And here I'll call to your attention. It's a calculation that you would have to make. We know the embedded in DNI, we know the embedded is 139,400, excuse me, 39,420 over 123, right? This is the embedded tax exempt in the 123. We don't know how much is embedded in the tax exempt, but by going through this exercise, if you do the cross multiplication, it comes out to be 39,740. That's how much is embedded in the modified tax exempt. So if you were to subtract 39,740, that's the tax exempt that's embedded in the fiduciary accounting income. It's 84,260. What's the lesser of the two? It's that our tentative taxable income is 83,280 minus 83,580. Guess what it's going to be, guys? Negative 300. The point I'm trying to make here is that you take your tentative taxable income and you have to subtract out the lesser of modified DNI or modified fiduciary accounting income, whichever is the lesser of the two. And why did I go through this exercise? I had to figure out how much embedded tax-exempt income was in the fiduciary accounting income. And if you go, we know what was embedded in the DNI. And if we know what's embedded in the DNI, we can extrapolate and figure out what's embedded, the tax-exempt income embedded in the fiduciary accounting income. Think about it. It's hard to do at 8:45 on a Wednesday night. But on the weekends, it will hopefully come a little clearer. So your answer for your notes, the answer to 3-12 is negative $300. (3-13) is easy. It says calculate the amount subject to taxation in the hands of the beneficiary of the trust described in 2-2. I don't want to say it's easy. It's the lesser of 124 or 123, right? That's under 652A, right? The beneficiary is going to be taxed on the lesser of those two numbers. The fiduciary accounting income or DNI, right? What's fiduciary accounting income? 124. What's DNI? 123. So the beneficiary is going to be taxed on 123. Everyone agree? So your answer to 3-13 is 123.
Now that question just means what's actually on the K1, right?
Yeah.
Okay, because I don't really like the wording in that as opposed to
It's a little bit awkward.
Okay.
Now, let me just pause for 1 second and then I will. All right. And just pass that around. Let's do 3-14. Now that we know, yeah, if you want to just, Jenny, take that. Now that we know 3-13, the answer is 123. Let's just talk about 3-14. It says, what is the character of the income? Okay? What is the character of this income? So we have dividends. We have interest, taxable interest from Chrysler. We have New York City interest, which is tax exempt. Tax exempt. And we have Old McDonald rent, which is 20,000. And so this is items of income. we have 50,000. Principal interest of 30,000. New York City interest of 40,000, right? And we have the trustees' fees. Remember, the trustees' fees total $2,000, right? And we know the trustees' fees, what amount were disallowed? 580, right? So 580 has to be allocated, right, to the New York City interest, right?
Yes.
How about the other 1420?
You can allocate it how you wish, right?
Right, and we'll allocate it against the interest. And what about the property tax of 15,000?
Direct to the rent.
It's a direct expense. It has to be allocated to the rent. So I'm going to just put one asterisk here. This connotes regulation 652B-3B. It says indirect expenses can be allocated anywhere. Okay? And then the two asterisks says this same regulation says that any expenses that were disallowed must be allocable to the tax exempt. And three asterisks for direct expenses. Under regulation 652B-3A, what does it say? You have to allocate direct expenses to those items that produce that income. So, and this, guys, is directly from the example of the regulations, nothing original here. And if you go through this, you have $50,000 in dividend income, $28,580 of Chrysler interest, $39,420 of New York City interest, and the rent is $5,000. You add this all together, you're going to fall off your chair if I tell you what should it total?
123.
$123,000. That's straight from the example of the regulations. (3-15) says, with your answer to problem 3-13, different, the trustee had failed to distribute to the beneficiary any of the fiduciary accounting income. And Tina, just on your way out, I know you've got to catch a train, but just so you know, don't worry, you can leave and walk up and hear the answer as you're leaving. Is the outcome would not change. Okay, Tina? Even if they failed to make a distribution, the outcome would not change. So information on the go. Don't worry. We're going to keep reading for next class if you could get up to page 205. Okay? Have a good night. I may have to send Tina a note. We may get, if you can keep reading, maybe even as far as page 221 for next class. Okay? I don't know, maybe 215, somewhere in that neighborhood, guys. Whatever we cover for next class, again, it will be free game on our exam. Certainly get up to page 205. I'm hoping to get a few pages further. So let's do this, guys. This is a good illustration, I hope, of worthwhile exercise, seeing what is a simple trust. Next class, we're going to see what is a complex trust, and then we're going to talk about Code section 663C, separate share rule. We're going to talk about specific requests that do not pull out DNI that I alluded to earlier. Any questions?